Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din low. EURUSD ended last week below the level of 1.0700, thus reflecting bearish sentiment among traders. However, there were no crucial changes and market volatility was quite average. On the 4-hour chart, the RSI technical indicator is hovering in the lower range, which also indicates a bearish bias. On the same time frame, the alligator's MAs are still headed downwards. In case the euro weakens further, the price could move towards the euro's low. However, if the quote closes above the level of 1.0700 by the end of the day, then in case the 1.0700-0760 cycle may resume. In terms of complex indicator analysis, we see that in the short-term period, technical indicators are pointing to a bounce of the bullish bias. Meanwhile, in the intraday period, the indicators are reflecting a downward cycle. There are pivot points as a lifestyle. Evangelos Poulakis explains how to trade GBPUSD currency pair. The bears tested last week's low and broke below the weekly support at 1.2665. If they manage to hold and confirm this result, GBPUSD will continue to fall by breaking below support levels on various timeframes. Today, the nearest important levels are around 1.2596, the upper boundary of the daily cloud, and 1.2578. The market may quickly replace the bearish activity with a bullish one if the bearish scenario fails to materialize. The bulls will be primarily interested in the resistances of the daily Ichimoku cross, currently located at 1.2712, 1.2740, and 1.2764. Bears had the main advantage on the lower timeframes once the forex market closed on Friday. If they maintain the advantage, the downward movement will continue. The intraday targets for the bearish movement are the supports of the classic pivot levels. However, if the current balance of power is disrupted and the price breaches the key levels, which were in the range of 1.2676 and 1.2687, the bulls will gain the advantage as well as new prospects. The intraday targets will be the resistances of the classic pivot levels. New pivot level values are now available. We've got a trading plan for USDJPY currency pair. Miroslav Bawulski explains. The dollar repeated its pattern of impulsive growth from Thursday, as it jumped by 86 pips on Friday. The target level of 160.40 is already too close, and it exceeds the high of April 29th. Next, the target mark of 161.00 is visible, the point where the upper boundary of the price channel coincides with the Fibonacci level 110. we are expecting a price reversal from one of these target levels. A triple divergence with a Marlin oscillator will form amid such a reversal on the weekly time frame. The Marlin oscillator shows the beginning of the reversal, which is already a sign that the price may not even reach the target level of 160.40. In this scenario, we can confirm the reversal when the price moves below the Fibonacci level of 76, 158.24. If the price reaches 161.00, a decline may occur if it moves below 160.40. The price and the oscillator are turning downwards. The signal is weak but may grow stronger over time. The MACD line is approaching the level of 158.24, reinforcing the support. If the price surpasses this mark, this could fuel the decline. Take note that on the daily chart, the MACD line is approaching the level of 158.24. We await further clarity in this situation. That's all for today. See you online soon.